And as always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super, super Saturday. Absolutely, it is. It is a super Saturday. All right. It is December 28th, 2024. All right. To be honest with you, this is the last super Saturday of 2024. This is the last weekly trade watch list of 2024. Absolutely. Absolutely. It has been an amazing year to be able to do these weekly trade watch lists. It's been an amazing year to be able to impact so many people in a positive way. Okay. It's been an amazing, amazing year. All right. So let's look at it and see how many people are going to have coming live for this stream. All right, we're gonna see how many people are gonna have coming live for this stream. All right. Gonna see how many people gonna have live coming for this stream. Before I get into any type of teaching, any type of instruction, we're gonna patiently wait for a few minutes, seconds to minutes, to see who is going to attend the weekly trade watch list, the last weekly trade watch list of 2024. The next one is going to be a new year. Let's see. Let's see. People that come on the live, comment, comment on the live stream, comment on the live stream, and comment where you're from, calling in from. Not calling. Well, not comment where you're calling in from, because you could be where you're from and where you are currently located could be two different locations. But comment on the live stream. I'll shout you out because I want to simply recognize you and shine light on you that you absolutely took time out of your busy schedule in order to be on this weekly trade watch list. So I kindly ask that you comment on the live. Reveal yourself. Reveal yourself. Whom are you? I appreciate you for watching the weekly trade watch list. Who's watching live? Who's watching the live? Who is currently watching the stream? I want to be able to shout you out. Okay, you must be in an environment where you can't reveal yourself. If you don't want to, or you're unable to comment, I'm assuming you may be driving or preoccupied, and you're still tuned into the live. But if that's the case, I appreciate that. I appreciate that respect. I appreciate that respect. If that is the case, I appreciate that respect. I don't know why my IG just sat there and I pressed live, but like it didn't go live. Some type of interruption. So give me a moment. Give me a moment as I let IG in here simultaneously while we do the weekly trade watch list. No, that's going to be January. All right. Attempt number 2. Oh, no, that's a disaster. Fresh strawberries in the bottom of my cup. It won't come out. By the way, this is from Donna Letty's in Houston. From my experience, they only have 2 locations. It's a family-owned business. All right, y'all ready to get started? So hopefully you got pen and paper in hand. If you don't have pen and paper in hand, I appreciate you for tapping in. Okay. Propel peach water on deck and Propel black cherry water on deck. All right. We'll start with the peach first. Type in the chat if you are listening in. Comment on the live stream if you are listening in. All right. So we didn't take any trades on gold today. Not saying that there were any setups, because there always are setups. Okay. Every single day there are setups. But we took trades on Bitcoin. Okay. And these were the results. Okay. Now there were more trades absolutely taken, but these are the ones that we're going to go over. All right. Post your comments in the live stream. Whom are you? The person that's watching the live stream, and where are you from? All right. So here's Bitcoin, right? So the whole point with Bitcoin never stops printing any candlesticks at all. All right. So it continuously prints candlesticks all the time. Right here, internal substructure. We have remember the market moves in market price cycles. Okay. The market moves in market price cycles, and the market moves accumulation, reaccumulation, distribution, redistribution. What does that look like? I'm gonna show you on the monthly. This is what this looks like. Okay. Right here, we have the market creating a low. The market is at a discounted level. You want to buy at a discounted level at a retail price. You don't want to buy at a premium. You don't want to buy when it's expensive. You want to buy when it's inexpensive. Okay. So the market's at an accumulation level, right? And so say if you are the shoe plug, right? And you got in the shoe game, you got in the shoe business, and you found some Jordans at Walmart, Payless, and Shoe Source for what? Little to nothing. But you know, these the real deal Holyfields, the real deal Jordans. And you knew that within the next few coming weeks, you knew that the value of these Jordans were going to rise. The price of them were going to rise. So you bought at this level. This is the accumulation level. The market goes up. And then now the market then reaccumulates. This is some type of bullish triangle or bullish channel. Okay. The market will reaccumulate. And then boom, at this level, it's still at an affordable price. The value of the Jordans that you bought at the accumulation level, the value of them went up, but it's still at affordable price where you're able to stop. Okay, boom. reaccumulation level. Now the Jordans that you bought at the accumulation and reaccumulation level, they have now hit a premium. And now the Jordans that you bought at the accumulation and reaccumulation level, you bought for $100. They now hit a premium price. Now it's in a distribution level. Okay. Which means you're going to sell, right? You're going to sell the Jordans that you bought at the accumulation and reaccumulation level. You're going to buy for 100 at the accumulation and reaccumulation level. You're going to sell for 300 at the distribution and at the redistribution level. This means the value of the Jordans that you bought are now what? Decreasing. And you're going to, while they're a hot commodity, you're going to do what? Sell at a distribution level at a premium, and then the Jordans that you bought are now losing value, and now is at a redistribution level. You're still going to sell some more, right? And so you bought for 100 at the accumulation and reaccumulation level. You sold for 300 at the distribution and redistribution level to do what? Pocket the difference of $200. Okay. So now when you come back to the accumulation level, you then do what? You buy some more. You are replenishing the stock. You ain't necessarily sell out, but you could have sold out, but you're replenishing the stock at accumulation and a reaccumulation level. Then accumulation and reaccumulation causes an old high to be broken and a new high to be formed. So this is called a bullish BOS, which is called break of structure. Bullish break of structure. Now, if you're going to be a serious trader, my advice to you when you create your account on TradingView is to be able to create these templates. Okay, you have the icons over here to the left hand side, and what you can do when you draw the icon out, you can right click on it and you create what? A template. I got several of these templates saved. So when you see the color, when I see and I got a color code system associated with my charting. Okay, so I do not get lost in my own sauce. I don't get lost in my own analysis. So on my monthly, it's going to be black. On my weekly, it's going to be pink. Excuse me. On my daily, it's going to be red. On my 4-hour time frame, it's going to be blue. On my 1-hour time frame, it's going to be green. On my 30-minute time frame, it's going to be gray. 15 minutes is going to be purple. 5 minutes is going to be orange, and 1 minute is going to be yellow. Okay. Now this, I just drew this on the monthly. All right. I drew a diagram out on the monthly. So you'll be able to see it as far as a diagram, a drawing. Then we're going to do what? Transition to the candlesticks, be able to identify the drawings in the candlesticks. All right. So the market moves accumulation, reaccumulation, distribution, redistribution, accumulation, reaccumulation, bullish breaker structure, distribution, redistribution. The market caused a change of character. The market caused a change of character because when in an uptrend, the market creates a low, high, higher low, higher high. Okay. So the market in an uptrend creates higher highs and higher lows. Okay. So here's the deal. Why did the market break through here? And when the market actually disrespected this accumulation, it caused a change of character. I need you to put this in your notes if you do not have it. A change of character does not determine and cause a change of trend. A change of character does not confirm, does not cause, and does not determine that the market has changed trend. It's just exactly what it said it did. Changed character. Because what happened is this: in an uptrend, the market is creating a low, high, higher low, higher high. The first higher low that is broken in an uptrend is called the change of character. Okay. The first higher low, which is the accumulation level, that's broken in an uptrend is called the change of character. Now, if I inverted this and I flipped it upside down, right? If I flip this upside down, this would be a downtrend. High, low, lower high, lower low, right? So now this is a downtrend. In a downtrend, the first lower high that's broken is called the change of character because a lower high is not supposed to be broken in a downtrend. And vice versa. A higher low is not supposed to be broken in an uptrend. When that happens, it is confirmed that the market has changed character, and that is it. The market has not necessarily changed trend, but it has changed character. Okay. So in this particular example that I drew, you can see how the market did what? Created a distribution, redistribution. This is the same thing as sell side liquidity being taken. This is the same thing as a bearish change of character. This is the same thing as an inducement, which is getting people in to place their buy orders too soon, because everybody that are ill informed and uninformed about market price cycles and how the market moves, they're trading double bottoms, triple bottoms, double tops, triple tops, wedges, pennants, bullish flags, bearish flags, head and shoulders, inverted heads, all these retail trader traps. They don't understand how a market prints. The market makers know that you have been trained to trade like this, and they intentionally put these moves in the market in order for you to do what? Induce you, entice you to press the buy button and press the sell button. They entice you to press the button that they need you to press in order for the do the complete opposite of what you're doing. So guess what? Say for instance, if you're looking, say for instance, the market makers want to place a buy order right here in this area, right? In order for them making the market go up to break structure and create a new high. Say if the market makers wanted to buy from right here, they're going to make it look like that they want to sell. They need your order in the market in order for it to do the complete opposite. So here's the deal. Don't you know when you press the buy or sell button on your broker account, the broker puts you in the trade because somebody is willing to do the complete opposite at that same exact price. They found another order to marry up with the order that you're putting in the market. So guess for example, if you put a buy market execution right here, that means somebody was willing to sell at the same exact price you was willing to buy at. So you can't buy something if somebody you can't buy at a price if nobody's willing to sell at that price. Vice versa. You cannot sell at a price. You cannot sell at a price if nobody is willing to buy at that price. Does that make sense? What's up, Dorcas? Dorcas is from Nigeria. Does that make sense? You cannot buy at a certain price if nobody is willing to sell at that particular price. You cannot sell at a particular price if nobody's willing to buy. So that's why you probably been in a situation before, like I've had several times, where you had enough funds in your account, right? And you click the buy or sell button, and your transaction and your order didn't go through. And you're like, man, what they doing? Man, they tripping. It's not they tripping. They didn't find any orders or anybody else willing to do the complete opposite of the order that you're willing to put in. So until they find somebody willing to do the opposite of the order that you're willing to put in, your transaction and your order is not going to go through. Okay, so there are always the equivalent amount of participants, equivalent amount of buyers and sellers in the market. The market does not go bullish because there are more buyers in the market than sellers, or the market doesn't go bearish because there are more sellers in the market than buyers. That is a myth. That's not what happens. It's always an equivalent amount of participants in the market, equal amount of buyers as well as sellers. Okay. This is how this thing works. Okay. So, but the market does move in an M and W pattern. So right here, you have an M. Right here, you have an M. Okay. This is called a harmonic pattern. The market prints these market price cycles in a harmonic pattern fashion. The M would be a buy and the W would be a sell. This W would be a sell. X to A to B to C to then D. Okay. So what you'll do is this. What we'll do is um after I go over the particular trades that we took on Bitcoin, I'll wipe away all of the trades that we took on Bitcoin for the week, and we got to remark it up to prepare for the what next week ahead, because this is just like working out. It's like repping that new muscle. Erase everything, the history, erase everything, and mark it back up so we can have new, fresh set of eyes for the week ahead. Okay. If you do not prepare, this is in professional and in personal life. If you do not have a plan to win the next day, then your attempt was not to win. Your attempt was to lose. If you do not have a plan to win the next day, then your intent was to lose. So you cannot get upset about what happens tomorrow, whether it was whether you didn't grow, whether you didn't produce anything like that, whatever you wanted to be great at something, whatever it is. You cannot be upset about the results that happen tomorrow if you had no intent on winning the next day. You had no plan on winning the next day. That's how life works. So the market moves in a harmonic pattern fashion, okay? And you can use Elliott waves as well. Same thing. The pivots in the market, same thing. Same exact deal. Like right here, this will be, in order to pivot up here, this will be what? Wave one, wave two, wave three, 4, and 5 will make this what? Divergence right in here, this distribution. Okay. Wave 1, 2, 3, 4, 5 will be the divergence. Then the market does what? It goes from the motive phase to the what? Corrective phase. It goes into a correction. So now the market is going to do a what? A ABC correction. A, B, C correction. And then the market does a what? Excuse me. Another 1, 2, 3, 4, 5 wave. 1, 2, 3, 4, 5. And then the market does what? Another ABC correction. See, this all makes sense, especially if you're in my free Telegram chat. I go over all of this. I go over all of this. All right. So I go over all of this. All right. Take time out. Who else is watching the live stream? Please comment in the please comment on the live. You know, your name and where you're from. I will shout you out. All right. So here's the deal. These are the trades we took on Bitcoin. Okay. So I said in my Telegram chat, I said on my live Zoom call, I said on my live Zoom call, not my Telegram chat. My live Zoom call, we took a sale on Bitcoin right here, 1 to 10. You can see the execution. You can see the execution off the 1 minute, right? You see the yellow, right? We were simply what? Mapping our way to the millions. I stress to the community. We need to map our way to the millions. We need to do what? Pinpoint every single movement of the market. Every single candlestick is intentional. Our job is to become better detectives of the market. Okay. What's up, Jasmine? Jasmine. So please tell me, I tagged you in the Telegram chat. Please tell me the gold trade that we took on New Year's Eve, you let run and hit 10%. Please tell me that the gold trade that we took partials on and we were risk free at, you let it run and hit the overall 10% trade. You let it run and do overall 10%. Please tell me. Please let me know the result of that trade. You don't need to know the dollar amount, but the fact that you let it. You just stop loss too close. All right, because I was about to say, like this has been your first 10% trade. That'd have been the first 10% trade. Okay. It's all good. 10% trades coming in the future. All right. So here's the deal. This is what we're particularly looking at on this particular trade right here. All right, let's see what's up. That's not it. It's over here. Trade over here. You gotta pay attention, pay better close attention to the market price cycles. I'm telling you, you have the confidence to press the buy or sell button and know when to press the buy or sell button. And we do market executions over here. We don't do pending orders. Okay, we don't place pending orders. We don't guess that price is gonna buy or sell from a certain area. We don't do that. All right. So here's the deal. We see that. Let's start with the M5 time frame first. We see that right here in particular, we see that price has done what? Okay, price create a low right here. You can see in between here what? The distribution, redistribution that did what? Took out this old low, created this new low. So price then diverged, changed character, came back down, created a higher low, broke up above, created a higher high. So you can see this accumulation, reaccumulation in between here that did what? Broke this high to do what? Create a new one. So then, hey, here come the sellers. Distribution, redistribution in between here, and then the price did what? Create a low. So then the price was done going down. It then did what? Started to go back up, right? So now the price did what? Accumulated, reaccumulated. So all in between here, you can see how price did what? This is accumulation, reaccumulation, created a high. This high did a distribution, redistribution, respected this low. Price did what? Accumulation, reaccumulation, broke above this high, created this new one. Distribution, redistribution, respect this demand zone. Accumulation, reaccumulation, broke above this high, created a new one, right? Distribution, redistribution, came back down, respected this demand zone. Accumulation, reaccumulation, broke above this high, created a new one, right? So now every time the market breaks an old high and creates a new one, you expect a distribution, also known as a bearish divergence, followed by a change of character. Okay? That is your next anticipation. Okay? After you see a reaccumulation, or after the market breaks an old high and creates a new one, you're going to expect what? A divergence. Excuse me. So you can see even on the RSI how the market is doing what? Slanting upward in this particular area on the candlesticks, and it's slanting lower on the RSI like this. That's a divergence. Okay. So then you can see what led to that divergence is what? A distribution, redistribution that did what? Caused a change of character and create a new low. So then the market did this. Okay. Accumulated, reaccumulated, create this high substructure right here. Distribution, redistribution. The market did not. Well, here you go. Accumulation, reaccumulation, created this high. Distribution, redistribution came back into this low, did not break this new low. The market then did what? Accumulated, reaccumulated, broke structure internally, created this high. Now we can go to the M1 time frame to go identify it. When you're able to mark up these things better, you're able to take trades based off of a scalp entry, and you can do your 1 to 10 easily. You can do your 1 to 10 easily. Is papita, is chiche, is papito, chiche. Yeah, because papita is for women, papito is for men. I'm working on my Spanish, Jasmine. What up, LT? I'm working on my Spanish. My habla español. My habla español. Senora Rivera. All right. So this is a bullish breaker structure, right? You can see how I'm gonna tell you this. Write this down if you do not have this in your notes. The purpose of a higher low In an uptrend, the market is creating higher highs and higher lows, right? The purpose of a higher low is this. The purpose of a higher low is to create a bullish breaker structure. Let me go back to the monthly so I can show you what I'm talking about. So right here, when we're looking at it from this particular position, this is a higher low in the market. Low, high, higher low. This higher low, its primary purpose and 100% responsibility and duty is to do what? Break an old high and create a new one. Okay? Break an old high, create a new one. Now, in a downtrend, right? A lower high, excuse me, a lower high, its primary job, responsibility, and duty is to do what? Break an old low and create a new low. A higher low, a higher low's primary responsibility is to do what? Break an old high and create a new high. A lower high primary responsibility is to break an old low and create a new low. At times, this is not going to happen. There's not going to be a 100% success rate. Okay, it's not going to be a 100% success rate. Okay, so that goes into saying what I was getting ready to say about this Bitcoin trade that we took for sale, right? This particular Bitcoin trade we took for sale for 1 to 10, right? So what I'm saying is this, okay? We see how the market created this low, created this high. This lower high right here that respected this supply zone, redistribution supply zone, did not break low, this old low, and create a new low. Stop right here. So now internally, substructure, we're bullish, right? Going back into a supply zone, right? Going back into a supply zone. Oh, here we go. So going back into a supply zone right here, that we know when the market diverges and creates a change of character, we know there's a supply zone. There's an imbalanced supply zone. Every time the market diverges and changes character, there's an imbalanced supply zone. Now, the market at times is going to leave that supply. The market at times is going to leave that supplier demand zone imbalanced, or is the market's going to come back and pick it up. In this particular example, the market diverged on the M5 time frame, caused a change of character, and the market decided to come back up and refill this imbalance. Okay. So what leads to a bullish breaker structure right here? What led to this high being broken? This high being broken was a result, was an outcome, was an effect, right? What was the cause? Internally, the market had to do what? Accumulate, reaccumulate in order to create what? A bullish breaker structure. Okay. Market had to accumulate and reaccumulate in order to create a bullish breaker structure. So what happened? You can see after the bullish breaker structure, the market then diverges. This is a divergence. Market's landing upward, market's landing lower right here on the RSI. So your anticipation, you need to understand how a market prints from up here in order to have a better understanding when to place your trades and where to place your trades. Not pending orders, to do an execution. Okay. So right here, the market changed character, right? Because this is a distribution, redistribution, tapped into some type of demand zone. The market accumulated, reaccumulated, broke above an old high, created a new one. Distribution, redistribution, did what? Broke an old low, created a new low. The market changed character, but a change of character does not determine a change of trend. A breaker structure shows continuation of a trend. Okay. So this goes to show you, you have some people that when this change of character happened, they did this. I guarantee you they did this. Oh, I'm going to place a sell stop, or I'm going to sell when the market decides to break this low, and I'm going to put my stop loss above this high. Why do that? And why do that? And then you're becoming a part of the market's liquidity. Why do that and you become part of the market's liquidity? Why are you selling below a low and buying above a high? You missed the move. You missed the move. What creates a bullish breaker structure? Accumulation, reaccumulation has the effect of breaking an old high and creating a new one. So why are you looking to place a buy when the market has broken an old high and created a new one? It makes no sense. Why are you looking to place a sell when the market breaks an old low and creates a new low when a distribution, redistribution breaks an old low, creates a new low? Why are you looking to place a sell? And you keep wondering why. Number one, your stop loss being your risk being hella wide and it looks hella weird. Two, two, understanding why your trades are not resulting in what you want them to result in, because you're being reactive and not proactive in your trade. You're attempting to place a sell after the distribution and redistribution happened, which causes an old low to be broken and a new low to be formed. You're looking to place a buy trade after accumulation and reaccumulation has broken an old high and created a new one. That doesn't make sense. So this is what people are doing. This is why the stop losses get hit. Soon as it changed character, sold right here at this low, stop loss way above here, big hella risk, and then bam, stop loss got hit. Or they do this. They turn around and do this too. You know what? Oh, we just broke above a high. Let's place a buy entry. Let's do a buy stop. And a stop loss right here. Not understanding the market price cycles. This is the ridiculous stuff that they do. But if you want to understand the market price cycles, how to be able to identify the market in the right way, no knock to any other trade mentors. I'll help you understand that. And it's people on this live that have their own testimonies. All you have to do is the Telegram links that are free in the description below the video. All you have to do is download Telegram on your Google Play Store, App Store, subscribe to the YouTube channel, and add yourself to the trading community and trading signals chat, and you can come be on witness and testimony. Live recorded Zoom calls Monday through Friday. I'll break it down for you. I'll make sure you understand. You take trades live with me. You see me do it live. I post on all social media platforms that I have: Snapchat, Facebook, Threads, and Instagram. And I'm showing you the results. Now, the next thing is, are you still gonna have your ticket to the movie and spectate, or this year are you gonna want to participate? Because I'm gonna tell you this: one or two things is gonna happen from here on out. If your feathers have not been ruffled enough in your life, if you haven't decided to learn how to trade, you're gonna be forced to do it, because something is going to happen in your life. I'm not preying on your downfall. That's not what I'm doing. What I'm saying is your feathers are going to be ruffled. Something's going to shake, rattle, and ruffle your feathers to the point where you consider trading. That's what I'm talking about. That is what I'm talking about. And I put out a Telegram chat how to calculate your lot size and your stop loss so you do not over leverage on your account, so you can properly risk manage your account. I put that in the chat. All right. So here's the deal. Going to this particular trade, right? The market does what? Break an old high, create a new one. So now we'll be looking for what? Sales. What's this right here? The market accumulated, reaccumulated, hit a redistribution, right? This redistribution, hit a redistribution right here. The market did what? Sold off of it, distribution, redistribution. It did not create a new low. The bulls took it back over. Accumulation, reaccumulation, broke above this high, ultimately leading to do what? Break this high and create a new one, creating a what? Bullish breaker structure. Now what? After the breaker structure, you anticipate the divergence. What's this? Price landing upward, price landing lower. Look at it. That's a divergence. How now when the market breaks an old high and creates a new one, it's not a matter of, hey, are the sellers going to show up? It's okay. Now the sellers got to show up. It's a matter of, not a matter of if, it's a matter of when and how are they going to show up. So this was a market execution placed, right? Stop loss right above the 1 minute high. Okay. This is considered a 17 pip stop loss on Bitcoin. A 17 pip stop loss on Bitcoin. So we sold, right? Now, the trading system that I put in the chat, you can adopt it, choose to adopt it, or you can choose to do your own thing. It's up to you. What I have is a 1-to-1 is a break even. Okay. So when the price goes 1% in the profit, I'm taking my stop loss out of profit and I'm placing it at a break even. I do not do a trailing stop loss. I don't do a trailing stop loss because the market can come back. The market can come back and retrace deep enough to the point where it doesn't take you out at break even and then go and do what? Fulfill your trade. So I have a trading system. So when the market goes 1% in the profit, hits a 1-to-1, stop loss comes out of profit, goes break even. The market goes 3% in profit, 1-to-3. We taking at least minimum 50% partials off the trade. We're closing 50% of our lot size. So for instance, if you traded with a 0.04 minimum, like I tell like I tell my family in my chat, I call them my family. Okay. Like I tell my brothers and my sisters in my chat, 1-to-3, you have to close minimum of 50% partials. You can close 60%, 70%, 75%, but you have to at least close minimum 50. So if you're trading with the minimum lot size that I recommended, which is 0.04, okay, you will close, right, 0.02 when the market hits, when the market goes 3% in profit, you'll go to your platform, close 0.02, and leave the remaining 0.02 in the market in order to do what? Fulfill the overall 10% trade. Now, here's the deal. There was a brand new trader that came on this particular session, on this particular morning. We actually sold in front of his face, stop loss right here, 1-to-1 break even, 1-to-3, close 50% partials, and we let the overall rest ride. Now I'm pretty sure it's a lot of people that would have did this. Oh man, soon as that market did this and started retracing, oh, they would have gotten out. They would have closed. You have to eliminate the emotion. Trading is an emotional skill, but you have to trade a system in order to eliminate the emotion. So check this out. I put in the chat, you want your trade to end in 4 different results. Okay. Small lesson, which is your stop loss or account protector being hit. Break even. You didn't gain, nor did you lose. Small win, big win. These 4 results do not hurt your account. You have to know your numbers. Okay. So here's the deal. Here's the real spiel. Out of these 4 results, you have a 20, every time you click buy or sell, you have a 25% chance of your account going backwards because of your stop loss being hit. These are facts. 25% chance of your stop loss being hit. You have a 50% chance of your account going up, being via small win, which is a 1-to-3 and taking partial, or via big win, right? Which is the overall market going 10%, right? You have a 50% chance every time you click buy or sell in order for that to happen. Okay. You have a 75% chance that your account does not result in a loss because break even, small win, and big win does not make your account go backwards. All these 3 things are facts, but you have to understand the market price cycles, when to press the buy and sell button, what time frame needs what, everything. That's what you need to understand, and I will make sure you understand that. Everybody, everybody that's watching, people, a lot of people that's already in my Telegram, they have their own testimony. They'll tell you for themselves. Why do you think I have a chat with over 90 members? Do you think they're not getting value? Do you think they just, subscribed to the channel, or they're subscribed to my YouTube? They follow me on social media. They're in the Telegram chat for just the sake of their health. If I wasn't giving out value, come see for yourself. Come see for yourself. I put out a weekly schedule to show you when I'm going to go live. the times that I'm going to go live, and I trade live in front of people's faces. I don't care about making mistakes. That's going to happen when it comes to trading. Nobody's a perfect trader. I don't care how long you've been trading. That's like driving. I don't care how long you've been driving. At some point in time, you're going to get a nail in the tire. Some point in time, God forbid, somebody's not going to be paying attention to the point where they accidentally rear-end you or hit your car. Doesn't matter how great of a driver you are, just you got to watch out for them. It's like you got to drive for them. Something that my pops taught me. I don't care about your driving because I trained you, but what you got to do is drive for other people. You got to already have this premonition. You got to be able to see it. It's like right here. I just finished reading John C. Maxwell's "Developing the Leaders Around You," which I highly, highly recommend. I got other John C. Maxwell books on the wall behind me as well, but you have to read "Developing the Leader Within You" 2.0 first, and then next you have to read "Developing the Leaders Around You" and how to help others reach their full potential. This not only applies to professional life, but it applies to personal life as well. As far as you being in a relationship with a significant other, you being in some type of organization, you would be some type of nonprofit organization at work, whatever the case may be. Y'all working on a project, whatever. Leadership applies to every industry and organization. So, yeah. Okay. So, obviously, I was asked by the individual that came on this session for the first time when we did this trade. He said, "Hey, do you ever close out your trades?" No, I let the market close me out once I enter. I don't want to adopt the psychology of fear that, man, I should have held my trade. If I would have held my trade, I could have had more. If I would have did this, and now I'm starting to adopt a trait that I don't need in order to be able to execute a trade in the market. This is a trait of fear. God did not equip us with a trait of fear, but of faith and a sound mind. That is scripture. So you don't need to incorporate that into your trading. If you have your system or the systems that I laid out in the chat, you have no fear to press the buy or sell button if you just follow the system. 1-to-1 break even, 1-to-3, 50% or more partials, and let the rest ride to 10%. Do that every single trade with a minimum of a 0.04 lot size. I'm telling you. Now, here's the deal. I even threw out a formula on how to calculate your stop loss or your lot size. Now, here's the deal. My question is this. Which one would you want? Would you want a small stop loss and a larger lot size, or a larger lot size and a small stop loss? Which one would you want? That's a rhetorical question. You know, would you now? Some people want to. Hey, I want to have a small stop loss so I can have a larger lot size. Okay, cool. Let's work on that. Some people want to have a larger stop loss so they can have a small lot size. Okay, cool. Let's do that. Okay. Now, let's see. Let's go. That's one trade we took, right? This is another 1-to-10 trade right here that was taken. Okay. The market moves in market price cycles. When you're looking at the market, you're in one of 4 market price cycles. You're in an accumulation, reaccumulation, distribution, or redistribution. You're in one of the 4. So my thing is this. You need to map up your breaker structures. You need to map up your change of characters. You need to map up your market structures. You need to map up your market price cycles. So I do an accumulation and distribution by these markings, these dots. Map up my breaker structures and my changes of character. I map up my reaccumulation and redistributions by putting these trend line channels you see on my charts. Every single move and every single candlestick in the market is super intentional. It's not an accident. Even if the candlestick or trade is news induced, it's absolutely intentional. It's absolutely intentional. The market doesn't, when news hit, the market doesn't do the opposite of what the market was going to already do. It's an assistant. It's like, okay, you're traveling north at 40 miles per hour. Okay, news comes out. You were going to travel north anyway. Now, news says, hey, how fast do you want to travel north now? The news comes out, hey, we're going to travel north at 75 miles per hour now. That's what news does. News doesn't say, hey, you're going north 40 miles per hour. News comes out and say, hey, now we're going to go south. We're going to go south at 65. No, that doesn't do that. It assists on what the market was going to already do. So it's, hey, do you want to do this faster or slower? Okay. So looking at these market price cycles, look at this. After the market did this, distribution, redistribution, the market broke an old low, created a new low. Who has to come into the market now? When the market breaks an old low and creates a new low, who got to come into the market? Guarantee the people on my call know this, especially the people that's in the Telegram chat. When the market breaks an old low and a new low has been formed, who have to come into the market? Absolutely, Jazz. The buyers. Market breaks an old low, new low forms. The buyers got to come into the market. So look at this right here. This is an area right here where the market created an accumulation. Market slanted lower right here. On the RSI, it slanted what? Upward. Look at it. I did it without even looking at the RSI. You have to develop that trader's eye. This ended up being what? A bullish change of character, right? So now we know that that's a low in the market. If this low gets broken, who got to come back into the market? The buyers do. Look at this. Old low broken, new low formed. What did the market decide to do? What did the market decide to do? Oh, we're going to diverge and we're going to change character again. Another accumulation. They have to come back in. Old low broken, new low formed. Buyers got to come back into the market. It's not nothing that I made up. It's how a market prints. Now, here's the deal. The market decided to do what? Accumulation right here, divergence, change of character, reaccumulation. Oh, what's next? What's after a reaccumulation? In the market price cycle, how the market's supposed to print in order, what is the next market price cycle that's supposed to print after a reaccumulation market price cycle? What's the next market price cycle that's supposed to print after a reaccumulation market price cycle? Let me see. Something is wrong with my screen. Yeah, something's wrong with my screen. It's showing gray. Distribution, absolutely 100% correct. That is correct. Let me see. It's showing gray over here. Yeah, it's showing me Y'all can hear me now? My screen right here is messing up the whole time. Like, can y'all hear me now? Okay, so I have to have this video up then. It's just y'all can't see me. Y'all see how gray it is right here? Y'all see how it's gray? Because my screen is gray right here. I can't even see myself. Yeah, it's something happening on the StreamYard feed. Yeah, something happening with the StreamYard feed. Okay, I just simply refreshed it. So yeah, I didn't know what was gonna happen if I refreshed it, so I just simply refreshed it. And so I should be back now. Can my picture should be yeah, my picture's back now. So wow. I said a lot, but we're just gonna continue to push forward because that's gonna be once you go back and watch the replay, there's gonna be a delay where you don't hear me. So you know what happened. You know what happened. Technical difficulties. All right. But we're gonna keep on pushing. Okay. So here's the deal. Gonna mark up Bitcoin. Okay, again, this is a breaker structure right here. We're not necessarily gonna look for take a trade because I'm really past my time, but we're gonna mark the chart up. Okay, accumulation, reaccumulation causes the old high to be broken, new high to be formed. Right. So we necessarily don't need to be concerned with anything else on the monthly. Okay, so we go down to the weekly. Okay, you can see how price wants to diverge, right? You can see how it probably wants to create some type of bit of a divergence. Okay, so that is key. That is key to understand what we need to understand. What the higher time frame wants to print. Okay, allows us to forecast our vision on what's happening. So what I see, I'm be honest with you. What I see is this diverging, right, and this wanting to be a redistribution of some sort. All right, that's what I see. This wanting to be its own. This wanting to print um a bearish triangle. I see the market doing this, creating a bearish triangle, and then wanting to sell down eventually. All right. So what I'm going to do is simply put this inside of a bearish uh, redistribution, something like this, and anticipate. And we can ping pong and buy and sell all day long in between here. 100% valid. All right. So right here on the 4 hour, you can like literally market structure. All this makes sense and is clear as mud. Clear as mud. There's a divergence. There's a change of character. There's an open supply zone right here. Right. So you can do this in between here. Okay. I had this low right here. And I'm gonna tell you this. These these bearish triangles, also known as redistribution of market price cycles. When it comes to Elliott waves, these are called A, B, C, D, E triangles. Okay, so right here, where the harmonic pattern is at, where it says patterns, and it says Elliott wave triangle, these are literally um, A, B, C, D, E triangles, and then selling off. So how do you know where to place the pivots? How do you know where to place the A, B, C, D, E? Is based off of a divergence and a change of character. Is based off the pivots in the market. Is based off of an accumulation and distribution. These are the highs and the pivots in the market. So right here, I see this as an accumulation level, right? Because the market did what? Went up from here. Market accumulated, reaccumulated, created this high right here. Distribution, redistribution, took out this old low, create a new low. You can see you got an engulfing candlestick right here. That's a what? Accumulation, right? So I see it as what? A, B. You see divergence and change of character in between here. This is a C. Once price decides if it wants to diverge, change character, or want to do one wick low that's completely on the market. This could be a D level. And now my anticipation is this: the market creates an E level. And after the E level, sells off. And it's going to completely drop and drown. Let's see where can I find that it may drown to. Market may drown to at least minimum this area. It could be this area. It possibly could be this area right here. Let's see. This area would be first, or this particular area would be first. All right. So what I'm saying, long term, this is going to be a redistribution, and the market's going to drop again. Bitcoin is going to drop, and my vision is it dropping to at least right here, at least back to 81,000. 81,000. What is this? 81,000. 81,614. 81,614 area. Right here where this wick is at. All right. People are going to be shocked if this does happen. And you understand why it happens? Because you understand how market price cycle prints. Now, the market is definitely going to go back up, back to here, or hit this redistribution before it does the major drop. So you know that will be the next semi mid long term vision to come back up here, and then you look for your sell. All right. So what you can do is you see this open supply zone, you see it imbalanced. You can do just like this. Hey, you know what? I'm gonna zone out my 4-hour supply zone because this is an area of interest where the sellers can come in and can sell off of this. Okay. Now we're not gonna take a sell until we get confirmation that we can sell from it, which means the formation of the candlesticks. So you know you need buys going back up here. So on a lower time frame, you'll be looking for what? You'll be looking for buys. So now you see how this is a divergence and change of character. The market created a what? A redistribution, right? See the redistribution in between here, right? Now we're on the 1 hour on this. See how your mind does like a refocus when you you erase everything and you be able to see a different picture of the actual market. So now the anticipation is, let's see. Let me see if that's an imbalance on the M5 or something. Nah, let's see. Let's see. What is Bitcoin about to do? So what I can do is this. I can start marking up from any area. And I can say, okay, cool. Market broke structure right here, right? Bam. Break a structure. I'm on a 15-minute time frame. Okay. Boom. Break a structure. Market created a high. Came back down. Market pushed up above the supply zone. So then what I see is, okay, the market did this low. I'm on the M15, so low. This is a high. Let me go to a lower time frame. Find out what's going on. Okay. I see the market is in an engulfing candlestick on the M5. So the market created a low, high, broke this low, created a new low. Buyers came in. Let me see on the M1 what's going on. And it looks like the sellers are going to come in because you can see how the market did what? Diverge, change character. Accumulation, reaccumulation leads to a what? Bullish change of character, but it went straight to an immediate supply zone, right? So it left this imbalance open on purpose. So now my anticipation is this, that the market sells from where it's currently at, breaks past this low, and then it comes down to this particular area for buys. It comes down to this particular area for buys because right here you have a reaccumulation. You have an M1 reaccumulation. So I'll show you like this is my anticipation. Like if the market doesn't want to sell from here, then maybe the market does what? Create a break of structure, break up above here, develop new highs. Then we'll still be looking for what? A bearish divergence. All right. So don't be trigger happy. Don't assume. Remember, you never miss trades. You never ever miss trades. You're always ahead. Either you gonna trade pro trend or you're gonna trade counter trend, and you're gonna trade the buy or you're gonna trade the sell. You never miss any trades. You never miss out. You never miss out any trades. Okay, so here's the deal. What you'll do is this. If you want to even mark it up on the M5 time frame and say, okay, cool, bet. What I see is this. Okay, the market created a high, a low right here. You can start from anywhere, y'all. The market created this high. The market created a divergence and change of character, right? That's a low in the market. Okay, that's a low in the market. It's a clearly, you see, it's a divergence and change of character. It becomes a low. Okay, regardless of what happens, it becomes a low. All right. We don't know what the market's going to do. We don't know if the market wants to create an M, use it as an inducement. We don't know any of that. Okay, but we're just marking up the market accordingly to how it's being marked, according to how it's being printed. Okay, that's all we're doing. That's all we're doing. So what you can do as well, okay, you see how this low right here led to this high, and then the market came back low right here, right? And then the market did what? Broke structure and then created this high right here. And then this high led to what? The market creating a low right here. So you can create these blocks right here. Okay, cool. The market decided to do what? Go bullish off of this level like this. And you'd be like, oh, M5 demand zone. Then next time, what? The market did what? Came back down to this level. So when the market created that break of structure, you knew this was an open demand zone because they all got to be connected, right? So then, bam, the market came back to this low, right? And then did what? M5 demand zone gave another push, right? You see the supply zone, it got respected, went down just enough, but then the market created divergence, internal change of character, and the market may do what? Break above this high, right? So these are all possible opportunities. All possible opportunities. Just to some person, they'd be like, "Oh, this is a bunch of mumbo jumbos." To hey, it may be a bunch of mumbo jumbo to you, but you can get a scalp in. It does just because the market is doing this on a higher time frame doesn't mean you don't have any opportunity to buy or sell. That's not what that means. Because somebody would absolutely 100% avoid this. Oh man, yeah, that's choppy. That's like choppy is absolutely doing something. And we need to be what? Better detectives. We need to be better detectives. All right. So like I said, A B C D E triangle on the way. That's what I see. A from here to here. A B C D E. So here's the deal. With these A B C D E triangles, they are how let's see, the market price cycle that's being identified in between it. It's called, when we come to Elliott waves, it's called ABC A wave, ABC B wave, ABC C wave, ABC D wave, and then ABC E wave. Is a 3 by 3 by 3 by 3 by 3, if that makes sense. So what I'm saying is this: what makes up the ABCDE triangle is this. Okay. Um, what makes up the ABCDE triangle? It's it's smaller ABCs is doing this. A B C A wave. Turn this a different color. All right. ABC A wave to get from here to that A wave. Then the market did what? A B C B wave. Then the market did what? A B C C wave. Then the market did what? A B C D wave. And the market's not doing what? A B C E wave. So, like I said, overall, you're looking for buys. I'm telling you right now, overall, you are looking for buys to get back up here on Bitcoin. Okay? I'm telling you right now, you are looking for buys overall to get up there for Bitcoin because of what you see on the higher time frame. Now, um uh, normally I do I'm start doing this stuff earlier. People who are just brand new getting started with us, I'll do onboarding and make sure that you have your demo account and your live account set up to be able to trade next week. If you have a particular preference of an account balance that you want to start with your trading account, what I recommend is depositing anywhere from 50 minimum to $100 per paycheck into your trading account and wait till over time it builds to that starting point that you want to start with. Other than that, you could practice taking trades in your demo account. So we're going to close with this. Um, we're going to close with how to calculate your stop loss and your lot size. That's what we're going to close with. Got to have you trading with proper risk management, okay? So here's the deal. Say, for example, I'm going to go to a monthly time frame just to type it out, okay? Say, for example, let's see. Let me make the text bigger. All right. Say, for example, number one, you have a $2,000 trading account, okay? Let's say for example your trading account is at $2,000 balance. Okay, you got $2,000 in your trading account. Okay, the thing is we only want to risk anywhere from 0.5% to 1% max per position. Let's say we're risking 1%. Okay, so risking 1%, what is the dollar amount of the account risk? Which means if we're risking 1%, what is 1% of $2,000? 1% of $2,000 is $20. Okay, so that's the dollar amount. Okay, dollar amount of account risk when the risk is 1%. All right, so 1% on $2,000 is $20 risk. Okay, so we found the dollar amount. We found the dollar amount associated with the risk that we want to take on our next position, which is we only want to risk 1% of our 2,000 on the next trade. So we only want to risk $20. We found that out. Okay. So now it's how do you want to risk the $20? Do you want to have a large stop loss and a small lot size? Or you want to have a large lot size and a small stop loss? Okay. So here's the deal. Now you do this. You take, and then you have to the lot size that you're going to use is a minimum of a what? 0.04, right? It's a minimum of 0.04. So now we need to find out what is 0.04 equivalent to. Okay? What is 0.04 equivalent to? What's the dollar amount on the lot size? That's what I'm attempting to ask. Dollar amount of the lot size. What is the dollar amount of the lot size? The dollar amount on a 0.04 is 40 cents per pip. Okay? 40 cents per pip. Make sense? Y'all following me? Cool. Y'all following me? Y'all follow me? Y'all good? This is how you calculate. Right now, we're solving on how to calculate our stop loss and pips. This is stop loss and pips, and then I'll go over how to calculate your lot size as well. All right, cool. So here's the deal. We got a $2,000 trading account. Okay, we only want to risk 1% of that $2,000 on the very next trade. Okay, so the dollar amount of 1% risk is $20. Okay, then we're going to use a minimum lot size of a 0.04 on this trade. Okay, and the dollar amount of the lot size that we're going to use, a 0.04, is equivalent to saying 40 cents per pip. Okay, so now what's the math? You're going to take $20, right? You're going to take $20 and divide that by the dollar amount of the lot size, which is 40 cents per pip. Which is 40 cents per pip. And then that's going to equal what your stop loss is in pips. That's going to give you your stop loss. So what you'll do is this. Go to your calculator. Oh, y'all can't see my calculator, can y'all? Nope. Excuse me. All right. So what you'll do is $20 divided by 40 cents will give you what? 50 pips. 50 pips stop loss. This would be, so now here's the deal. You have found out that, okay, if I have $2,000 in my trading account and I trade with a 0.04 lot size on my next trade, my stop loss can be max 50 pips, and I'll be only risking $20 on my account. Now, obviously, if your stop loss is less than 50 pips, then you're not over leveraging. You're not you're still within the means of proper risk management. If your stop loss is over 50 pips, now you're risking more than 1% of your account. Does that make sense? You need to find your ceiling. So even if your next trade is a 30 pip stop loss with a 0.04, guess what? And you have a $2,000 trading account balance, guess what? You're not risking more than 1%. You're risking less than 1%. So now you say, okay, cool, I'm in a trade. I can have a 50 pip stop loss based off a $2,000 account, and I only want to risk 1% of my $2,000, which is $20. Okay. Trading with a 0.04 minimum lot size, my stop loss cannot be beyond 50 pips, or I'm risking more than 1% on this trade. Now, here's the deal. Here's the deal. The lot size can be your choice. So I said you can either trade with a large stop loss, small lot size, or a small stop loss and a large lot size. So here's the deal. What if you decided that you wanted to trade with a higher lot size? Okay. What if you decided that, hey, okay, I know I'm trading with a minimum of 0.04. What if I decide that I want to trade with a 0.10, right? What if you want to trade with a 0.10 lot size? Same trading account balance. You want to risk 1%, which is the same $20. So now the dollar amount of the lot size being used is what? A 0.10 is saying what? $1 per pip. This changes to $1. Okay. This changes to $1 per pip. Okay. So now what will happen is this $20 divided by what? $1 equals how many pips your stop loss can be on risking that $20. So guess what? $20 divided by $1 equals what? 20 pips. So guess what? Because you want to use a 0.10 lot size, your stop loss can only be 20 pips. That's how you're risking that $20. That makes sense? Everybody cool with that? This is how you calculate your stop loss. Everybody cool with that? Thumbs up. So you're coming up with the lot size that you want to use. What you're doing is calculating your stop loss. Okay? The lot size is a number that you want to use. So if I want to remember, you're using a minimum of a 0.04, regardless of what your trading account balance is. Your minimum lot size is 0.04. Okay. If you want to use a 0.06 on the next trade, okay, cool. Use the formula. 0.06 is 60 cents per pip. Okay. This is my trading account amount balance. Okay. I only want to risk. How much do you want to risk on the next trade? Do you want to risk 0.5%? Do you want to risk 1%? Do you want to risk 2%? Okay. So what you want to risk is what you want to risk. Okay. I only recommend minimum 0.5, max 1% per trade. But if you want to risk 2%, you want to risk 3% per trade, I'll show you how that looks. Okay. So say we have the same $2,000, right? And you want to risk 2% of the $2,000, right? Now, 2% on $2,000 is $40. Okay. 2% of $2,000 is $40, right? 1% is 20. 2% is 40. Okay. So then you said, okay, cool. I want to risk 2% on this trade. Okay. I want to use a lot size of minimum 0.04. Okay. Which means my dollar amount of the lot size is what? 40 cents, right? 40 cents per pip. So then this comes down here. This 20 changes to 40 because I want to risk $40. I want to risk 2% per my 2% on my account on my 2000. So you got $40 divided by the dollar amount of the lot size of 0.04 is 40 cents per pip. So then this will be 40 cents. Okay. And what you'll do is $40 divided by 40 cents, 0.40 is what? 100 pips. So guess what? My stop loss on my next trade can't go beyond 100 pips if I'm only risking 2% of my 2000. Does that make sense? If I'm only risking 2% of my $2,000, $40 is my dollar amount of the 2% risk divided by the dollar amount of my lot size, which is a 0.04, which is 40 cents, equivalent to 40 cents per pip, equals, hey, my stop loss cannot be more than 100 pips, or I'm risking more than 2% on my account. All right. Now, if you want to do what? A 0.10? You can do a 0.10. Absolutely. All right. 0.10 is what? A dollar per pip. Come down here. $1 per pip. Okay. This changed to what? This changes to the dollar amount of the lot size is what? $1. This changes to $1. Right. So 40 divided by, because I'm risking 2%, $40 divided by 1.00, which is $1 per pip, equals what? Now my stop loss, because I want to risk 2% on my account, my stop loss, because I want to use a 0.10 lot size and risk 2% on my account with a 0.10 lot size, my stop loss can't be beyond 40 pips, or I'm risking more than 2% on my account. That makes sense? Anybody want the formula? This is how you calculate your stop loss. Now, for your calculating your lot size, what you'll do is this. Let's take the same trading account that's $2,000 balance, right? We're calculating for the lot size now. So what you'll do is this. In order to calculate for the lot size, let's say you have $2,000 trading account and your percentage risk is 1%, right? Your percentage risk is 1%. But let me leave this example up here. Okay. So now I'll come down here and this is how you calculate the stop loss. This is how you calculate the lot size. Okay. You have a trading account that's $2,000, right? Okay. And so then the percentage we're going to be risking, let's see, the dollar amount of account risk is going to be 1%. Okay. It's going to be 1%. And 1% of $2,000 is what? $20, right? Okay. And so we want the dollar amount. Let's see. No, we already connect that. So the minimum lot size we're going to use is a 0.04, right? 0.04, which is equivalent to 40 cents per pip. Okay, which equals 40 cents 0.40, 40 cents per pip. So let me do it like this. You do it exactly. So then we got the dollar amount. Amount of the lot size. Okay, dollar amount of the lot size is 40 cents per pip. Okay, and so now the equation is this: we're risking what 1%, which is $20, right? Divided by what is our dollar amount on the lot size that we're using is 0.04, so it's 40 cents per pip. So that'll be 0.40, right? And that equals what? No, excuse me. We're calculating for the lot size. So we're gonna say our stop loss, it goes like this. Excuse me. So we don't have the lot size. I mean, we don't have the lot size. The lot size changes to stop loss and pips. Okay. So say that you come up with the stop loss. Stop loss in pips. Say, oh, I want to risk the 30 pips. I want to risk 30 pips on my next trade. Okay. So cool. You come down here and say, okay, you want to risk 30 pips on your next trade. Okay. So then you take the dollar amount, which is $20. Okay. Divided by your 30 pips that you want to risk. 30 pips, right? So you type it in 30 pips just like that, the number 30. So you find out the lot size. So you take $20 divided by 30, and it gives you what? A 0.06. Well, no, a 0.60, 0.66. So you can use a 0.66 lot size. Oh, I put my bad. It's there. It's supposed to be say account. All right. So if you had a $2,000 trading account, you're risking 1% of the 2,000, which is $20. And you said you want your stop loss to be 30 pips on the next trade. Okay. So $20 divided by 30, this is going to be your lot size, a 0.6, which is 0.60, or is 0.66. Okay, 0.66. If you want your stop loss to be 30 pips, this is how you're going to risk the $20, the 1% on this lot size. If you want your stop loss to be 30 pips, your lot size, in order to properly risk the $20, your lot size has to be 0.66 max. This is the max. So if you use a lot size over 0.66 and your stop loss is 30 pips, you're risking more than 1% on your account. You're risking more than 1% on your account. All right. So I appreciate each and every one of you for taking time out of your busy schedule to listen to what I have to say. It is always greatly appreciated. I would never, ever take it for granted. Have a safe, blessed, productive rest of your Super Saturday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And always remember, don't be one of many. Be the one. And if you simply want to become part of this trading community, download Telegram from your Google Play Store, App Store. Come back to my YouTube channel, subscribe to the channel, and on my most recent YouTube live session video, what you do is click on the live tab. In the description below, there will be links to be able to join the community, trading signals chat. Beginner, intermediate, or advanced traders are welcome. Let's rock out. Let's go ahead and prepare for 2025. Take care. God bless.